What's going on, everyone? Today, we're going to be talking about seller closing cost credits and how they work. And I'm also going to touch on seller tax credits because it really depends on where you live in the country and how taxes are paid. A lot of confusion around this. We've had a lot of comments about lenders saying you could only do 4% seller credits, and we're saying something opposite. We've done some research online, and that's kind of what seems to be going on. So today we're going to bring clarity to all of that. My name is David Piatek. I am a loan officer. So if you're looking for help in using your VA home loan, I am here to help you. You can schedule a call with me down below. Let's dive right into what is seller credits and how much credits you can actually get. Now, the information that we always provide is from the VA Handbook. So let me share that with you guys so you fully understand and you can maximize how much seller credit you can actually get from a seller. Now, why this is relevant is because we're starting to see more and more seller credits being offered. And then we're also seeing lenders limit what veterans can get. So right here in the VA Handbook is where we're going to focus on. So one thing I want to focus on first, which is a little bit later in this chapter, is this part. The 4% limit. And a lot of people are saying that, well, my lender says the max I can get is 4%. That's not true. So let me read it to you guys and break it down because I know it's small and probably some of you guys are watching this on your phone. So any seller concession or combination of concessions which exceed 4% of the established reasonable value of a property is considered excessive and unacceptable for VA guidelines. Now you would think to yourself, oh, David, that's the 4%. You can't do any more. That's not true. But this do not include normal discount points and payment of buyers' closing costs in total concessions for determining whether concessions exceed the 4% limit. What that means, okay, in a nutshell, is that you can get all closing costs paid for, plus typically 2 discount points on top of 4% in seller concessions. This is right in the VA Handbook. We do this all the time, but there are lenders that will restrict it, right? They won't go based on what's in the VA Handbook. They'll say, oh, you're capped at 4%. What you can use seller concessions for, right? You can, if you have a VA funding fee, the seller concession can be used to pay that VA funding fee. You can't partially pay a VA funding fee. For example, let's say a VA funding fee is $10,000. You can't say, well, I have $5,000 to pay that off of that amount to pay down. Either it's all or none, so you can use seller concessions to do that. Prepayment buyers, property taxes, and insurance, that's already included in your closing costs in most transactions. If they gift you things, that could count towards it. If you want to pay extra points to buy down a permanent interest rate, you can use that. Why they mention that specifically is because you can do a 2-1 or a 3-2-1 buy down. That's where sellers will pay basically a portion of your interest for the first 2 or 3 years. We have a whole separate video on that if you want to get into that. And this is another cool one, which only the VA loan allows for, which is payoff of credit balances or judgments on behalf of the buyer. So let's say, let's say you're buying a $500,000 place and you have a car payment that's, $500 a month and the balance is $7,500 or something like that. You can actually have the seller pay off your car at closing to help you qualify. And you're thinking to yourself, David, is that even realistic? Yeah, it is, because we do that a couple times a year for folks. They get a big credit and then they're able to utilize that in being able to get that money to pay for a car or credit cards. We see that all the time. Sometimes when you have excess money, but you don't have liabilities to pay off, like we just had that happen right now, then we just use that money to buy down the interest rate, because this is the key. If you're getting a credit and it covers all closing costs and then you don't have anything else to be covered, then you have to reduce the seller credit. So you don't want to do that. Some strategies people will use, if they know, hey, I'm getting X amount of money back and I can't use it, they might use their credit card for some moving costs or something like that, provide an updated statement to the lender, and then now they can use that to pay off that debt. So we've seen that done. Now let's move into something that's has a lot of people confused as well, which is going to be tax credits and your earnest deposit you put down. And in some areas, there's a due diligence fee you have to pay. So I'm going to break those three things down. I'm going to start backwards. So due diligence fee may not apply to you, but I see that in certain areas. Due diligence fee is a fee you pay at the time of making an offer that if you were to back out of the offer, you're not getting that money back. That's a due diligence fee. Now that fee, if you end up closing on the home, will be credited back to you to use towards closing costs or down payment. It doesn't make a difference whichever one. The second one, it's going to be your earnest check, your earnest deposit, right? Most properties, when you make an offer on it, you're going to have to put a deposit down. Now, we've seen some that don't, though whatever that deposit is going to be based on your area that you're buying in. Okay, so you really need to talk with somebody that knows the area from a real estate perspective. And that way, they're going to be able to help you walk you through that process. And that way, you know how much money you have to really put down on that. And then the other part's going to be your tax credit. This is why it's important to read through the contract and understand everything that you're signing. Normally, if you, like in Illinois, I'm going to use an example, one that I really know well. Taxes are paid in arrears, meaning that in 2025, you're actually paying 2024 taxes. So when you get to closing, the sellers have lived in the property up until the closing date, right? So they're going to give you a credit for the taxes that are due for the time they lived in that property. Because on your end, you have to set up taxes, escrows for your own account. So it's like a nice little credit that you get from them that helps pay for the future taxes that you're going to have to pay for the time they lived in the property. You want to know what that amount is because taxes normally increase over year. So normally there's some type of tax proration for like 105%, 110%. It just really depends on the situation and what exemptions they have on the property. You might come across a property that has a disabled veteran tax exemption, so they don't pay any property taxes. So they may not pass that on to you, but you may be able to keep that for another year. It's very circumstantial, and you need to talk to somebody that does this all the time to determine what that looks like. One thing I didn't mention when we talked about closing costs, what's the average closing cost for a purchase? Now, that definitely varies widely depending on where you buy. We've seen them we've seen them as low as about 2% of a purchase price, but we've also seen them as high as 5 or 6%. Now, it really depends, one, on the area that you're buying, two, the amount of fees you're being charged, and three, what the lender fees are going to be, right? So you really have to look at that loan estimate. We've been grateful to have a lot of people reach out to us from the YouTube community, say, hey, David, can you take a look at my loan estimate? Do you see anything wrong? A lot of times, yes, I did a whole video on how veterans are overcharged, and that still is the case. We've seen it just yesterday with a veteran getting charged $9,000 more than they were supposed to for the structure of their loan. So we were able to help them out. So it's awesome to help the community out because you definitely guys could reach out. If you have questions about this, please schedule a call with me. I'm happy to answer it. And you could also drop a comment down in the comment section and I'll respond to it. So hopefully you guys got some good content out of the video. Hit the like and subscribe button and I'll catch you guys on the next video.